The Wall Street Journal published an interesting article about Nvidia on September 2nd, 2024 that I thought every Nvidia investor should consider. It highlights several factors I've been discussing about Nvidia stock in the previous 12 months that make the investment case so attractive. But it also highlights the growing risk of competition for Nvidia in an industry it absolutely dominates right now. Now, I know whenever I bring up competition with Nvidia, viewers think it's not a big risk. After all, Nvidia is so far ahead that it'll take years for competition to catch up, if they catch up ever. Now, that might be true, but whenever you're running a business with such incredible profit margins like Nvidia is, increasing competition is inevitable. So let's take a closer look. Hey everyone, I wanted to take a moment to thank the sponsor of this video. Moomoo is a trading platform that allows individuals to buy and sell stocks and other investments. I posted the link to Moomoo in the description below. If you use that link to sign up to Moomoo, it'll help support my channel, but more importantly, you can get special incentives for using my link, including up to extra 10 free stocks. Alright, so here's the title of the article if you want to look at it yourself. It's called Nvidia Takes an Added Role Amid AI Craze, published on September 2nd by the Wall Street Journal. Now, a key point it makes is that Chief Executive Jensen Huang is increasingly broadening his company's focus and seeking to widen its advantage over competitors by offering software, data center design services, and networking technology in addition to its powerful silicon brains. Now, this is one benefit of Nvidia's strong competitive advantage, and I'll talk a little bit more about this as we move on the video. Goes on to say he is trying to build Nvidia into more than a supplier of valuable hardware component. He's trying to build it into a one-stop shop for all of the key elements in the data centers where tools like OpenAI's ChatGPT are created and deployed, or what the CEO calls AI factories. And Nvidia's advantage is so strong that it can do this. Let me dig a little deeper on that point. When you have customers that want your products or want one of your products, the GPU especially, so much that demand is like well excess of supply, you can charge premium prices, sure, and they've already done that. But what you can also do is tell customers, well, if you want to buy our GPUs, you've also got to buy our networking technology. You've also have to buy our CPUs. You also have to buy our Ethernet. You have to buy all of these other things if you want access to the GPU. Now, I'm not saying that's what Nvidia will eventually do, force people to buy their full suite of products if they want access to that powerful GPU and the ecosystem that comes along with that, including the software, the CUDA software. But as they become more dominant and as demand in the marketplace grows, it could open that opportunity. And that's something that when you have a strong competitive advantage like this, it opens up those opportunities. It opens up areas where you can now say, well, we've already priced our chip really, really high, and we don't want to raise the price of that chip anymore because we still want customers to adopt that technology. And if we raise the price too much, then it could decrease demand for the entire marketplace, the entire industry. And so what we can do alternatively is get customers to buy our other products that support that GPU in that AI data center. There's more than a GPU that goes into a data center. And so if we can supply more of the inputs that go into that data center, we can reap greater benefits without raising the price for the GPU, without raising the total cost of that AI data center. What we'll do instead is take market share away from some of the other providers in that AI data center. The article goes on to say that it is a strategy designed to extend the business success that has made Nvidia one of the world's most valuable companies, and to insulate it from rivals eager to eat into the market share, which is estimated at more than 80%. Imagine that. Nvidia's market share in the AI data center is over 80%. That's absolutely dominant. And so Nvidia is gobbling up more of the value in the AI data center that adds revenue and makes its offering stickier for customers. And so when customers go to design or they want to add an AI data center, they like the fact that they can just go to Nvidia for everything. And they don't have to go to Nvidia for the GPUs and then go to, let's say, Intel for CPUs and go to another company for the networking and go to another company for the integration and installation. They like that they can go with Nvidia. Now, Nvidia doesn't do the installation. They've been adamant that they don't want to do that. They want to leave that to companies like Supermicro Computer and Dell and others. But they are offering all of the components now. They are offering a lot more of the components, and Nvidia has done that on purpose. They want to have all the parts in that AI data center. Now, I mentioned competition is on its way, right? Nvidia's operating profit margins have soared close to 60%. That's excellent profit margin. Whenever you have a profit margin that high on revenue this large, over 100 billion in revenue, you're going to have competition jumping in because they want a piece of that action. They don't want to leave it to Nvidia, and they understand the market and they understand that customers are going to be open to competition because customers will not want that great a dependence on Nvidia, because Nvidia can raise prices and increase the demands from them. And so they want to diversify. And so AMD is making a push here. The report comes days after AMD purchased ZT Systems to try and gain ground on Nvidia. Now, ZT Systems is a data center design and manufacturing company. And this is AMD taking another step, taking another action towards taking market share from Nvidia. AMD already launched its own competitor chip, the MI300X, which is having great success on AMD's terms, right? It's the most successful product launch in AMD's history, according to AMD management, but it's still not taking a big bite out of Nvidia's market share. And so AMD, that was its first step, right? Launching that GPU. And then they've taken other steps, but then they purchased this ZT Systems for nearly $5 billion to take another step here. And inevitably, competition will gain traction, competition will come in because of Nvidia's very strong profit margin and because of the customers' need to and desire to diversify away from Nvidia's products and services. Even though Nvidia is, no question, best in class here for the AI factory, others will come in, and that's okay, right? That's okay, because when you have a market share that's growing this large, approaching 90%, regulators will start sniffing around, and you don't want that if you're Nvidia. You don't want to be distracted by regulators coming in and threatening to force you to split up your business into smaller parts or give up some customers. And so it's healthy for competition to come in, especially if competition is good competition as opposed to bad competition. And the big difference between good competition and bad competition is competitors that do not force industry-wide profitability to come down by aiming to take market share with price-cutting strategies, promotional strategies, discount strategies. That would be a bad competitor because that would bring down profitability industry-wide. However, if a competitor wants to come in to try and take market share by increasing spending on research and development, increasing its product offering, by offering more services, by providing an alternative, but still keeping the price relatively high and not lowering price, but just saying, look, we are competing based on our own solution, and we're not going to cut the price to try and take market share. We're just going to be here being that next provider just in case you want someone else, or just in case Nvidia, you're not able to buy enough supply from Nvidia because they're sold out, you can buy our products. And so that would be a good competitor, and Nvidia should encourage such competitors because ultimately it will be good for Nvidia. And it's early to tell, but so far, AMD seems to be a good competitor. They're not slashing prices, they're just increasing their services and just being there, being that other option, just in case customers can't get their hands on their Nvidia system, the Nvidia factory. So I thought this article was really interesting, and it really highlighted the benefits of Nvidia becoming so dominant in the industry and what they're able to do because they're so dominant by adding incremental products that are going to become multi-billion dollars per year annually in revenue very quickly, if not already. And then, of course, competition is on its heels. It's on the way. It's not threatening, and that's good news. All right. So don't forget to click that link below to get those 15 free stocks from Moomoo. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.